performance.
Sasol attributed the decline in revenue and profit performance to a combination of lower chemical product prices and unstable product demand. Factors out of its control like inflation and the exchange rate also hobbled performance.
When I look at year on year, our mining export volumes of coal has increased by 16%, but we saw a headwind on pricing of around 59%. If I look at our gas business, we had a 10% increase in volume, but as the input cost is dollar-based and the exchange rate worsened, our recovery in terms of the gas pricing is in South African rands, and that stayed flat. So there was no recovery of these costs out of the market. On our fuel segment, we've increased by 3% on a volume, or 8% on a volume basis, but on the cost side, we've seen a rise of 15% more cost.
As industry players who rely on Sasol for gas supplies fret about it, being on record to say that it will halt supplies by June 2026 due to declining flows from Mozambique, Sasol CEO says the most practical solution will be to import liquefied natural gas, and notes that the Department of Trade and Industry and Competition and the Department of Minerals and Energy have begun to gather industrial energy consumers to begin the process.
The only longer-term sustainable option that we know is LNG. So LNG is available globally. We need to plan for that, to bring it in as an energy vector in South Africa, and that we can get the infrastructure and the parties well in advance gathered so that we can be ready when this start to decline from the gas fields in Mozambique, and that we can bring in LNG gas. So the mere fact of the matter is that someone needs to secure that gas offtake, and therefore you need to put up your balance sheet to secure that LNG cost.
Market observers say given the country's current challenges with energy and logistics, it would be yet another blow for the economy if the gas supply issue was not resolved timeously. As for Sasol's results, there was little surprise given the decline in oil and chemical prices and broader economic dynamics.
The minute the economic conditions become very volatile, the minute as a company you start having lower selling prices for your products, and the very same products, the demand thereof becomes very unstable, and you also have to compete with inflationary pressures. And even though in some other operations you might have some improvement, but now you start having issues with the transportation of your product, in this instance logistic issues regarding the likes of Transnet, then it's not going to be surprising to see that your profits, your revenue will decline. And I think this is what is happening with the likes of Sasol, and we just hope that maybe they don't even start thinking of revisiting that idea of doing rights issue in order to try to raise capital, as we know that that idea was canned after the guys managed to sell enough assets to be able to pay some of the debt.
Sasol declared an interim dividend of R2 per share, a significant decline on the R7 per share it declared for the same period in 2023. Nampumelelo Siziba, SABC News, Johannesburg.